And here they are. My first words of the day. We are live. Try some music this time. Going live Wednesdays and Thursdays with live trading futures. Yes, here's a quick shout out to our music providers. The Relaxed Movement on YouTube. Royalty free music. It's a little background music here today. Want it to be chill. Want it to be chill. Want to stay away from emotions. Want to stick to the plan. Have you prepared yourself? It's not too late. 30 minutes before the opening bell. You've got time right now. Stretch, meditate. Get some good breaths in. How are you keeping the day off? Are you gonna follow your plan? Is that what you're focused on? What did you do yesterday? Tend to compensate for the things that we did yesterday today. So if you missed a couple of long setups yesterday, you're gonna be more likely to want to chase those today. Have that in mind going into this. Like fresh start, fresh start. Yesterday was a piece of cake. I love how we have all the easy days when I'm not live, but that's okay. Eventually, in a couple months from now, we'll stream every morning right here. I do always like to check on me gold, which is not gone nowheres. A little channel, yeah. I think we're gonna see, the similar pattern just at a glance. We're gonna see this similar pattern on the ES. Look at that. So channeling from yesterday's. This is gold. Okay, yesterday's AM high throughout the overnight, downward channeling like this. This type of controlled selling is typically bullish. Hard part is just like, where do you take it? Where do you take it? Well, usually the fourth point on these channels, the fourth touch is the best. You got one here, two here. You need three to make the channel. Right? You need three to make it. Can't make it without the third point. So you need this point. Well, this point happens first. So you have these two, right? One, two, three, and then this fourth point, that's the highest probability trade on these channels is the fourth touch. Three gives you certainty about where it is. Okay? And then here, in this case, the fourth, the fifth, and the sixth touch have all been respected. And the gold is open already. It's one of the reasons I like to look at it because it's in motion. It's open now. New York session still hasn't started, or just started, but getting a fair value gap inversion there. Okay, so that's gold. Probably won't trade anything but the ES. That's the focus. Are we seeing something similar on the ES? All right, let's take a look. Into the overnight here, lots of chop, in the late wee hours. Get to the London session. Are we seeing something similar? Sort of. Let's see if this jives. Yeah, roughly. Roughly did. Relatively. Same concept going on. Controlled selling is usually a buy. Now, the ideal situation for a channel like this, people think I'm crazy for trading the open, which I think people are crazy for not. One inflection point in the day where the market is almost certain to move. So in other words, pick a direction. Very, very much so. There's no other time of the day that you can sort of count on it like that. There's some days where the open is weak or slow or choppy, unavoidable. But That might be the right vibe right there. My voice is not very loud, so I have to compensate. All right, so this would be bullish. So we got one. Let's do this. One, two. Takes three to really make it. A lot of people also, when drawing these channels, would say, well, you've got to draw it from the bodies like that. So you don't give the wicks that much respect if you really want to have it be accurate. So one, two, three. So what's the most high probability trade from this channel? I don't trade the channels, but I would look for this, like the trade that I would take if this were during normal market hours right here. This fair value gap right here, I would take that. I would trade this guy right here if I'd been awake. It is 6:07 a.m. Pacific. Getting ready for market open. Got 23 minutes, plenty of time. That's a trade I would take because I would be looking for. I would use this touch here to tell me like, okay, maybe we should look for a bullish signal. I would let it go up here and break structure, right? So we have this. We have this lower high, lower high, lower high, and then break a structure with a higher high. And so when that happens, and now I looked back and go, all right, break a structure. Now, after also liquidity sweep. So all three, right? Liquidity sweep, then break a structure, and the throwback to either the order block, which would have been right here, or fair value gap. And I always take the premium fair value gap. So I wouldn't trade that one, although you'd be okay to trade that one. I would take this one, but the very beginning of it, very front of it, and then I've got the order blocks protection. So that's actually, would have been a great trade. Let's see, where is that? 86.50. Got 5 handles in there if you took that. But now let's see. So a lot of people would say on these, like, don't take it until you get the breakout of this channel. So that's when it's really bullish. Until then, it could just reject here and then come back down. And so it wouldn't be the trade it takes. You want to see it close above and then take it back to the channel. Could do that. Do that. But I do not trade it until the open. Let's just give us an idea. I like to look at it that way because you have to have a bias when you trade, right? You have to pick a direction. Got to take a side. Can't be Switzerland. Too many people want to be Switzerland. I respect the market. It could go up or down right here. Seen so many traders who have that mentality and they're trying to trade live. And it's like, wow. And of course, the market can go up and can go down. Always going to be true. Oh, my allergies go nuts. But at some point, you have to pick a bias. And although this is some people would see this as bearish. Hey, you got lower highs here. Now let's look at the even more macro break structure here. Look at that. So we're really breaking out here. This is the second candle of the day above the 21 EMA also. And that is the secret sauce, guys. Secret sauce. For sure. The 21 EMA. Notice that worked out yesterday. Back to yesterday's action. Look at the 5-minute chart here. This right here is a daily fair value gap, which unfortunately, sorry. That's not what that is. Daily fair value gap is lower somewhere. There it is down here. Unfortunately, this thing got touched in the wee hours. So we didn't get that piece of cake trade. The daily fair value gap got tapped. It's so normal. Such a normal and simple price action. But it showed us 2 days ago why it made sense at the open to have, 'cause that was Monday, why it made sense on Monday to have a bias to the high side. A daily bullish fair value gap got tapped and bounced off of. So the price was delivering from that. And that makes it easy to say, oh, okay, well, I have a long bias. And if you have a long bias, when the market goes like these, this was Monday's action, the market goes like these, very easy to make money. And then yesterday, the old the basics, if you will, accumulation here, right? Accumulation, manipulation, and then distribution. So it was also pretty easy to have a long bias yesterday. So it's been so long since there was a really like reasonable scenario to have short bias. But we're gonna go through the process here. We're gonna go through it. Top down, baby. I'd like to start with the monthly, just to be like, yo, what are we looking at here? And today, some crucial pieces on here today. God, it's so annoying sometimes showing you. Crucial pieces. If you're gonna trade the yesterday, best to know about these levels right here. 4605, 4629. 4605 and 4629. Those are the tips of the bearish order block spears, if you will. So, bearish order blocks on the weekly and on the monthly start in those areas. So, I'd say those are pretty key levels where we could dig into it and then reject from it pretty easily. I'm kind of expecting an upper wick situation. And last week I called it both days I was live, didn't I? Expecting to see like a wick kind of situation here. When a candle like this. That's such a bad chart. We're not good with these. Yeah, see, it won't let me like really draw it, but whatever. So, so expecting that. That's what I'm expecting. I'm expecting kind of maybe a wick higher today. Let's look at all these wicks right here. This is the monthly, right? So this could take some time for this to actually happen, but it could happen today. There's so much bullish momentum. We could go reach up in here. Today could be the day where we go create that candle that looks kind of like this, or begin to create the candle that looks like that. That's a monthly time frame. Get rid of the kill zones here. All right, weekly, obviously raging, just raging. I'm looking at structure wise here. You can see there's where the start of this monthly um, bearish order block also coincides with a flipped bullish order block. So that's why that was so powerful the first couple times it got tapped into. But you can see it got tapped into here after the breach, tapped into big wicks on a weekly chart we're looking at here. Got back into it, could not breach the previous bullish order block here. And the rejection took place. Significant rejection here as this thing went from 47.50 to 37.80. Wow. I mean, wow. Okay. Just 4,000 ticks. Wow. So last time we got up into this thing the market reject 1,000 ticks. That is an area that we wanna be aware of. It would be hard for it not to reject at all, but if if the market makers, whatever they wish will happen, if they want to go make a new all-time high, which frequently happens before these gigantic sell-offs, they may just turbo right through this. Just there's so much liquidity there, they could turbo right through this, and it'd be wild to see. But what kind of news do we have? We're gonna check that in a second. Let's see if is there any catalyst? Is there anything they can even use to draw in that much retail? We'll see. All right, this is the daily. You got daily order block that begins here, a weekly that begins here. We're a long ways from those. We have in process. We'll see what happens at the end of the day today, but we may have a bullish fair value gap. I feel like this is going to get closed today or pretty close to it. Like today might be the day where we actually dig into that. And so it's not technically a fair value gap yet, but it's in the process of being built. This one down here is that's the one that we showed earlier on the lower time frame. Dipped into that on Monday, which is why we had this bullish buy. So price is still delivering from that daily fair value gap, and there's multiple down here along with the 21 EMA. So whatever rejection we see, we're going to keep an eye on those areas because when a fair value gap intersects with the 21 EMA, that's usually a really good spot to enter. The 4 hour. Monstrous. Fair value gap there. Monstrous. So if we see rejection, we're gonna cycle back and look for these 21 EMAs lining up with fair value gaps to give us an indication that price is going to be delivered from an area where we can count on protection. Essentially, when we take a trade, the whole goal when you're taking the trade, using a stop, is that your stop has protection. What's protecting your stop? That's always the question you should ask for getting into a trade. Where is my stop being protected? Who's protecting my stop? Hey, I got a fair value gap, and then I got a bullish order block protecting my stop. Word. That's why I made special note of this 1 hour fair value gap right here, which has not been touched yet because there is a bullish order block also beneath it. So if I take something here at 79.50, should price get down to there, I've got a lot of protection. A lot of protection. And so that's why it's a good trade, because it's got a lot of protection from market forces. Okay. Take a quick gander at the 15-minute, then we're gonna look at the 5 and get ready here. There's an opportunity. Look at the 15-minute is currently building a pretty big fair value gap. So we're gonna keep an eye on that. See, I have this down here, 1 hour bullish fair value gap. We're gonna keep an eye on this right here for sure. We're gonna be looking at the 5 and the 15 today. 15 has just been building up so many beauties. Wanted to be front and center. We're ditching the 1-minute chart today. Okay, here's the 5. Yeah, so again, here it is. It's happening. Coming out of that downward channel that we just looked at. And rising above, obviously, it was bullish. It's a bullish bias. Here we go. To the next 10 minutes. Will we get a pullback? It gives us something to be excited about. Let's go ahead and draw this 15-minute. Go. And multiple Fibonacci gaps inside of that on the 5 minute. So that's an area right there that we are going to want to play. 92 down to 9 is a small area too, only a couple points. And then you have the bullish order block right here, which is actually attached to this bullish order block, attached to this bullish order block. So we've got daisy chained. I like to call them daisy chained bullish order blocks here leading up to the New York session beginning. Feel pretty good about that, having protection if we were to take it at 92, stop at 87. A lot of protection. Okay. What happens? We got a couple minutes. I'm gonna go blow my nose. All right, 7 minutes. How'd you start your day? Think about yesterday. Have you been a good boy or girl? Did you drink last night? Did you smoke? Are you hungover? Are you clear headed? Did you stretch? Do some down dog, get some blood flowing to your brain? Are you awake? Like, don't trade until you at least do that. There's still time. 6 minutes before the open. Kind of expecting to see a wick down here, and then we go. But I'm very, very, very aware. By the way, not financial advice. This video is for me. If you want to be a fly on the wall, you go right ahead. I'm at that point in my trading journey where it's me against me. Nobody else. It's just me against me. My system works. My setups work. It's really just a question of, I don't trade the up on the NASDAQ, by the way. I will look at the NAS after the opening range, but it's really just completely me against me. But I'm very, very much aware of the fact that 2 days in a row, I've had kind of like up only, like no reversals. And when you have that, it can kind of lull you into thinking like, "Oh, yeah, long. Yeah, dude. It's long, bro. Long. Let's go." And that could cause us to get into trouble if it's a choppy day, if it's a sideways day, or heaven forbid, a bearish day. But remember our levels 4605. So 4605. So to get 10 handles, I want to ideally get in 45.95 or less. It's made a big move here, and we would definitely like to see at least a tick above this. Otherwise, we could tend to be concerned about this being the start of a bearish order block. I'm going to look left here and see right now price is right on top of the PM high from yesterday, liquidity zone. So far, sellers have been extremely disrespected. We have daisy chain bullish order blocks. Okay. At least we got that. At least we got that. So now I don't have to be too worried about this being a bearish order block. That was my only concern if price had stayed within this level. So I feel like we're in good shape. If we get a pullback on the opening candle, it could be a situation where I'm going to go ahead and actually market buy. This also, this inefficiency right here, you can see on the 5-minute chart, the tick between this close and this open, that those little burps, those are typically really nice spots to enter as well. 91.50. You may not get it though. This could be one of these days where the market opens and just goes, just prints a god candle, and you just can't trade that. you, you just can't trade that. Or let's say I wouldn't recommend it. You got to be careful trading, no matter what you're doing. But that's the kind of madness that if it works, it's actually going to hurt you because it'll create a bad habit. Looking at bonds here, mortgage-backed securities. One of these days, this side is so bad. 19th, housing starts, building permits. Check out the headlines here. I want to see kind of what everyone's being manipulated by. Okay, so Goldman Sachs missed today. Yesterday was a bunch of banks that were outperforming. Carvana. Okay. So Goldman miss. I'm old enough to remember where that was a bearish situation. So we're not going to be taking a trade right at market open here in 15 seconds. We are going to be looking to see what happens with the first candle. Will it give us a confirmation candle? Will it just do that? And that was what it looked like it wanted to do. But it's just not, I just can't, you can't trade that. There's the God candle. Sucker. Yeah. Well, that PM high for him yesterday sure is gonzo. Get rid of that. This is where sometimes I wish I would pull the trigger, and maybe I need to change that. Once we get above and we're holding that 21 EMA, it's just so bullish, so insanely bullish. Well, goodness gracious. When we say up only, this is an up only atmosphere that you see so rarely. We're actually approaching one of our first areas to watch, 4605 monthly bearish order block up there. Stupid. So far, the market's shrugging off Goldman Sachs woes. Goldman Sachs misses on profit after hits from Green Sky Real Estate. How did you take a hit on real estate, guys? Also, we've got a 7-day winning streak for the Dow. All good things must come to an end. Is today the day? Does not look like it so far. This just looks like a giant middle finger to the bears right here. 15-minute charts on the left, 5-minute charts on the right. Dang. Thanks, sucker. Well, one thing you have to say, you gotta give me credit for this, nothing else. We nail the bias, right? Every single time. The hard part is, and I try to explain this to my wife, knowing which direction the market is likely to go, it does help. It's an important part of trading. That's not it. It's not everything. You have to know where could I get in to to the market where I actually have a good chance to not get stopped out. Early on in my career, as a trader, it happened so much where I would be right, we get stopped out. Sit there and watch the chart all day and go, "Oh, yeah, it's gonna go up, gonna go down, or whatever," I would know which direction the market was headed, but my entries sucked, and I was a little too tight with my stop losses, and so I get stopped out all the time, and I'd sit there and go, "Man, I knew exactly what was gonna happen today." Hit all my drawings, and I'd lose money, and it was just like, "This is impossible." You just learn to be patient, you learn to go, "You know what? I'm not gonna catch every move, it's okay. Yes, it's annoying for certain. It's annoying to know, like, today, hey, long bias, we should go higher, and just watch it happen." Now we're only up, like, 5 points so far from the actual opening print, and so what we're actually most likely going to look for is to examine that rejection, and I wondered if there would be sellers at 4,600. Very well may be. Now we're just trading the opening range. Hasn't quite gotten up to the very tip of that monthly bearish order block spear, 4605. Wonder if it'll get there. We did take out the PM liquidity. I side liquidity. Man, allergies so bad right now. It's crazy. So next best trade idea will be if there is a fair value gap on the opening candle, Typically, you wanna look for that as something to play, and so we're gonna look for that. What do we got? This candle just opened up. We got 4 more minutes before we see if this turns into a bullish fair value gap, remains, I should say, a bullish fair value gap, or if it gets closed down, we get some rejection. Tweezer top could happen right here. Note the close of this candle is what I'm talking about. Let's pay attention to. Bodies matter. The close of the opening candle below 4,600. Closes below. Just kind of looks like the algorithm's in a hurry to get the price up into this area where big boys might want to sell. I don't know. I don't know. We'll see. While we're waiting for that candle, let's go peep the Nasdaq. Oh, hello. The Nas is looking bearish, y'all. Tesla's up another couple bucks. Wow. What a wild opening candle. That's why I don't trade the open in the Nasdaq. What in the hell? What is that? 60-point range, 240 tick range in that opening candle on the 5-minute. Recovering now. Let's go back to ES. All right, let's getting up there. Gosh, it's frustrating. Yeah, I mean, I guess we could have longed the open. It's just, it's not a great setup. You make sense of it if you wanted to take a trade, but I've learned to wait for A plus setups. Even though that one could have been a pretty low risk, you know, if we'd taken the opening print, we're taking 95. Remember, I said 95 before. Take 95 because I have a feeling we'll get to oh 05, and we just hit oh 05. So if we had had the balls to take that, we would have just hit our 10 handle TP. Small bullish order block right here would have been our protection. So if we had taken the opening print, that would have been our protection. Then we didn't need much, just a few points. So would have been relatively safe. Would have had the protection of that fair value gap too. We probably could have taken it. Now that you see this, right? But you never know, right? When it's happening in the moment, you're like, all right, well, we have a long bias. We're looking for a long trade. We want to get a good entry. Sometimes the market just wants to run away. And notice now we've just touched the tip of this monthly bearish order block. Let's see how it reacts. Don't always necessarily get, just right on the tick. Usually digs into it a little bit. They want to bait you. So they give you these two big God candles. They bait you in, and then we'll see it like chop up here and then come lower. That could happen. Let us see what takes place. Yes. Yeah. Massive opening candle fair value gap now. Taking us up here. So let's just go ahead and mark this. Although it's been pretty pointless to mark the opening range low and the AM lows lately. They have not been touched. Tell you how many times I've had to go in and change opening range low to opening range / AM low, and doesn't get touched. Finally getting some rejection here inside of this monthly order block, but not something I'm just going to short nakedly. I'm going to take a look at our opening range. I'd like to get us set up here. I have a lot of displacement here between the 21 EMA and where price is. And typically when that happens, yeah, they kind of meet in the middle, right? At least I don't see a real reason for this. I mean, I can't say, oh, it's because Goldman killed it today. That's why the market's going to rally bananas and just rip bear face off. We don't have that. Goldman had kind of a disappointing quarter. Today the day that Tesla reports. It is. Tesla reports today. Wonder if that's after the bell. I'm not too worried about it. I'm an investor in Tesla. I don't trade Tesla, so if you're looking for someone who trades Tesla, that's not me. Bought Tesla all the way down to 105. Oh man. So sweet. It's been killer, obviously. All right. Eating our rejection now, slowing down as we are now touching this bearish order block. We've touched it. We've made contact. We're touching it. Now, what this could mean if how do you overtake a monthly bearish order block like this? Like, what is it going to look like? Well, most likely, it does not look like cutting through it like a knife. If you're going to beat a bearish order block, especially one like this, where there's just tons and tons of rejection historically, but this area, it might be a little choppy. It's going to be a little tough. It might take a second. It might be a lot of just back and forth, and so it can be overtaken. It can be overtaken. Every level can be taken in the markets. Nothing's safe out here. Crazy allergy attacks the last few days. So getting rejection there. This is a level. Hopefully, I'm saving you from longing here. Hopefully. Jesus. Okay. So we got a 5-minute rejection there, but it's not a crazy rejection. That's not a crazy rejection. When we have bullish continuation at a key resistance level. Usually that's what the bearish candles look like, right? Just sort of like the beginning of a bearish candle. So nothing crazy yet there. Quick fill in the fair value gap. That's not something I'm going to trade. Good Lord. Yeah, what we were really hoping for was somewhere around the open, a dip back down into this 15-minute fair value gap area, right above, right or right on the 21 EMA. We did not get that. Now we've got some disrespect for this bullish fair value gap here on the 5. Still a pretty big one building up on the 15. But we did clear that all important 4,600 number, which could be the flip. Could be the flip. Like I said, there's going to be like, if you're going to get through a heavy, like bear level like this, you're probably going to reject once, maybe reject twice, and then a third time, maybe you're getting through it. So it's definitely uphill right here for longs, I think. My opinion. It's not a short setup for me. But it would not surprise me if this is the opening range high right here. Opening range, first 30 minutes. I do like to trade that. 6:47 in California right here. 9:47 New York time. Somebody told me the other day, yeah, you call all the moves, but you're like not taking the trades. Like you called this area. Why didn't you take a trade there? Why didn't you short it at 46.05? It had very little drawdown. It's true. It's true. That's not what I trade. I'm not looking to enter necessarily at this level. This level here is just a red flag for me that, hey, you could expect some selling to potentially start right here. And if you see a short setup off of this, then you may want to take that. So, for example, if this becomes our opening range high, and then 7 a.m. comes and we come and sweep that, and then get a bearish signal, I feel pretty good about shorting, right? Because we know that the bias here might be flipping bearish after multiple days, this multi-day bull run. How many days has it been? I mean, look at that. So from the bottom of this particular run, 1, 2, 3, 4, 5, 6, 7. Today would be 8. So we have 7 days in this just pretty much parabolic straight up move. Today would be the 8th day. That's a lot of days in a row. Like at some point, there should probably be some rejection, right? But as you can see, resilient markets are not a big rejection, and lots of support stuff down here. The opening candle, bullish fair value gap is not something that you want to just expect price to knife through. Of course it can. Price can do anything. Anything's possible. That's not something I want to trade. I don't want to short here and just expect it's going to knife through here. I would want to see it come down here, touch this, come back up, and then go down and make a lower low. Give us a break of structure, show us something, get beneath the 21 EMA. Then we'll talk about shorting. Until then, really you want to buy those pullbacks with the expectation that the market will gain some momentum. And look at that. I mean, so we're just not really getting a lot of rejection right here. Now that could be this candle that we just witnessed. This could be a bearish order block. Let's just get rid of that idea right away. Go ahead. Take it up one more tick. It was not breached there. So this could be the order block that this is a pretty decent bull trap if you think about it. Could be. Notice the equal high there. Unable to breach high here, or the high range of this 5-minute candle, which is an indecision candle, open and close, the same tick. and looks like it very well could be a bearish order block. The only way we'll know that, though, is if price closes below this area. It's the only way to know. You can speculate. Can if you want. It costs you a few points. I'm just not interested in that because it doesn't align with my plan. And the only thing I have to do is follow my plan. If I do that, everything will be okay. So on the 15, you kind of look at this and go, all right, well, what would it look like, if it were going to like get up into this monthly bearish order block and really do some damage, like actually get in there and make some stuff happen, like really like a crowd. Would have a small rejection like this, right? Probably a small red candle on the 15, and then bait some bears in. Hey guys, I'm going lower, and then it would catapult higher, and this would be actually the process of creating a bullish order block. Bait some shorts so you can get some stops up here, create liquidity to run on to take it higher. So like, I don't know, it doesn't entice me that much to see something like this. But right now, it wouldn't surprise me if this was even the top for the day. There's just so many days in a row going up, guys. It just can't go on like that forever. There's got to be one sell-off. Like there has to be a day where people go, I think this is it. And maybe they're right, maybe they're wrong. But I'm going to go ahead and call this the opening range high. And I'm aware of the fact that it's not quite 10 a.m. Eastern. And therefore, the opening range is not complete. So if we go higher than that in the next 7 minutes, I'll move it. As my nose relentlessly runs. Massive allergy attack. See, look over the 15-minute. I'm going to check the hourly too, y'all. The old trusty 15-minute chart. And then you've got the old trusty hourly chart. Hourly chart is really printing one. I mean, it could, this could just be a big fake out, right? This could just be, it seemed like the computers were in a hurry to get price up to this area, didn't it? Just like, hey, we're in a hurry, get it up there so we can start selling. Could be what's going on. I don't know. We were able to breach the low of this candle, but not the high. So still kind of looking like a bearish order block. Want to see price breach 4604.5 to sort of confirm that it's not a bearish order block. Somebody's getting baited right now. It's a trap. Trap for who? Looks more like a bull flag than anything. Looks like a bull flag, guys. Let me show you what I mean by that. We had one yesterday. This one isn't gonna be as obvious as that one was, though. Where is it? Here it is. It was early on in the day too. It was during the silver bullet hour. See this? Get these like little red candles. So it's not there's no real rejection there. One liquidator, which came out to this. We had a bullish fair value gap right there. Came down, touched the midpoint right on it. And that's where it took off. So just kind of like chopped lower, gave you some red candles, bear trap. They did that just yesterday. Do they have the stones to do the same thing again today? Or is this one actually a fake? Do they expect you to remember what happened yesterday? That's the thing. If you're just trading on emotions and thoughts and not based on a plan, you easily talk yourself into either one of those being true, right? We're just trying to make a little dollars here in the morning before the workday begins. I don't like losing. I don't like taking losers. At this point, I feel like I don't have anything to learn, so losers are just no fun. Don't have anything to learn, meaning about my plan. My plan is dialed. I know what trades I want to take. Again, struggling here, although this feels more like a bull. I don't know. It feels more like a bull trap. And the only reason I say that is I'm always paying attention to what my emotions are telling me based on the price action. And my emotions are like telling me the long. And usually they're wrong, right? Okay, there you go. So not a that was what we were waiting for. That may spark. Okay. Now it's starting to dig. So if this were 0125, let's take the safety off here, team. So does it is acting more like a bull flag. Shout out to the relaxed movement. It's the name of this channel. I don't even know if anyone else can hear it or not, but I sure can. So do we want a long right up against this monthly bearish order block? All right, here comes the conclusion of the opening range. 45 seconds. It sure looks like they're going to come take that out, right? The opening range high. Yeah, every day with the same price action. You just can't believe it's going to happen again. And then here it is happening. Holding for the close. There it is. All right, now we're in the silver bullet hour. Our opening range is set. We got a jump right there. So this could be a glorious long setup, depending on where this next candle closes. We end up with a bullish fair value gap here on top of this bullish order block. That's as high probability as you're going to get. Okay, so that got nuked. The idea is gone. It just felt like a bull trap. But again, if we're going to get through this to the high side, if we're going to dig into this monthly bearish order block, it's going to be ugly. It's going to be kind of choppy. They're not just going to rifle through like on these two candles. The reason why these two 5-minute candles were able to be so big, so such little resistance, is because the resistance is up here. It's right at this level. Opening range low 45.95. How about that? Isn't that crazy that those numbers that I call exactly? So bananas. It does me no good if I'm not in. But that's exactly what I said. Hey, I want to buy at 45.95 or less. And that was not the opening print, but one tick below it and the low of the opening candle. Certainly expecting, at the very least, to sweep this liquidity here. Want to short this? I think you want to at least wait for that. It's my 2 cents. You get a jump here, got a jump right there, and the initial rejection has been overcome pretty quickly. That kind of felt like more of a bull trap, or sorry, bear trap. So jumped right there, right at 46.05, right at that moment, right at the level that the monthly bearish order block begins. Interesting, right? I actually like to use those for entries whenever you see that on the flip side. So if this were to break down and come lower and then come back up, so let's say we breach this low right here, right? Come down and make a lower low, have a break of structure here, and then come back up, I'd want to take it right. I would want to take it right at this level. Not because I have it previously marked as the beginning of this monthly bearish order block, but because of this skip right here. That's what would make me interested in it. And this could just be one of those days where it just grinds higher. Let's check out the NQ quick. Oh my gosh. Chop hell is what that is. Congratulations to anyone who made money on this garbage. Whatever. Oh my word. 16,000 also, not just a psychological level, but a level that sellers would target potentially. Market makers would target potentially. Look at the chop on that thing. Yikes. Let's take a look at gold quick. Also chop. Look at that channel that we drew at the beginning of the day. Still holding both sides of it. Wow, look at gold. Is gold ready to explode? Already back up to 1980. I thought it was dead. Got to like 1915 or 1905 or something recently. Okay. Progress on cutting in to this monthly bearish order block is underway. So the market relentlessly goes higher. Has not taken out the opening range buy side liquidity yet. I do think that's next. And then we're going to find out what's what. Okay, there it goes. Boom. So for everyone who wanted to short this level, or I may have been asking, why didn't he take that? Now you know why. Now you know why. Because everyone and their mother probably took a short here with their stop right up in this area, and you just became liquidity for the market. Now, I don't know if they sufficiently drew in enough people to really see it's not really taking it on flight necessarily, but that could be it. So opening range high once again taken out almost immediately. Let's see if we actually take out the opening range low today. All right, dipped back into this bullish order block right here. And that's really the level that we want to see breached if we're going to short. I'm actually going to even set an alert here. Just in case it happens later once I start my work day here in just a bit. Trade this hour. This is a money hour. I'm looking for we're giving them 1 minute the heave ho today, but now I want to keep an eye on it because I want to see where the 21 EMA is on the 1 minute. Because if price is above both on the 1 and the 5, then that's a no short zone for me. Why? Seen it so many times. Not getting huge rejection here either. It really looks like it's trying to get up in there, although this could be a breaker here. Building up. If this is a green candle, but then it doesn't. This could be the one that we get the rejection off of. I'm not interested in it unless we make a lower low than this right here. So it's our first low of the day right here. So I want to see price go below that, and then ideally come back up to this 4605 number. That would be like Bisukikming. And that would make sense because I'm expecting if we do go lower to take out the opening range low here and possibly dip down into this 15-minute fair value gap. So we give you 10 handles if we got that trade. We'll see. We'll see. So far, look how it's holding on the 1 minute. At 21 EMA, I'm telling you, it is the secret sauce of all secret sauces when the trend is taking place. And then, like, let me see if I can show one of the things that's also great about it. Let's go back to yesterday. It's like when you have a fake out, there was one like right here where it dipped below and I was like, okay, we've switched on the 21. Never take that right away without some sort of other signal because that's where a lot of fake outs are on the 21 EMA, like right here. See this area right here? That right there, fake out. Once it reclaims it, right? That candle that reclaims it is a perfect place to enter. And then also, even on the flip side, once you got rejection here, same spot, it's like you can use that 21 EMA. It really tells you what the current trend is, but it also shows you those fake outs if you're patient. Right now, it looks like this thing is going to try to carve its way through this insane monthly bearish order block. Is this the one? I would say they've sufficiently baited some longs here. There's some people in here who are feeling it's like, we're going higher, y'all. Well, the next level we have to watch if we continue to go higher, it's 46.29, 46.30. There's a weekly bearish order block up there. So if we're going to dig into this thing and really go higher, we don't have a true long signal here yet. That was kind of a clue. The continuation trade setup that I like the most, it's on the 5-minute, but the concept you can see better over here on the 1-minute. We have the fair value gap, bullish fair value gap, and then we touch the 21, right in that same area. Ideally, it's like right on it, like over here. See this top of this bullish fair value gap right there? That's the kind of ideal on the 5-minute, not on the 1-minute. Happens just too much on the 1-minute. But when you're above the 21 EMA, look for continuation trades at those bullish fair value gaps. And then the opposite below for the short side. All right, let's see here. Was that the end of it? I would expect it to be today, I would expect today to not be one of those days where we just are up only like we have been on Monday and Tuesday. It would seem as though due for at least sort of one of those days where we go up and down and maybe we kind of end up right where we started. That would also still be kind of bullish at this particular level. It just wants to sort of relentlessly go higher here. So I would not try to catch this knife. I would not try to just short this thing because it's very, very likely.
All we want to do is pump you up.
I just grind this thing higher. Grind it higher and grind it higher on the backs of all the shorts. Everyone who's like, oh, no way. It's going to be 8 days in a row. I wonder, gosh, it just makes me think about all the poor people, all the poor souls who've been shorting for 8 straight days now. I'm going to be right one of these days. One of these days, I'm going to be right. And they're going to celebrate. They're going to be so happy that one day, if they have any money left, even if they have any money left, they'll be like, see, called it. You don't want to try to call tops and stuff like this. Like, let the market show you an obvious short setup. We have a level, like we believe, like right now, we're in a place where there could be a lot of sellers. We could be entering a sell program any minute here. That's perfectly reasonable to expect. But we haven't really seen huge rejection. We just haven't seen it yet. So is this it? Are we headed there now? We want to see a break of structure and then a return back. All right. It looks like a sell program might be initiating here. Okay. Let's load the gun, guys. Take the safety off. Now, we're in a bullish order block here. So don't short it. Do not short it until that's violated. Okay, there's a reason I have this alert here. Price in this area is actually a buy, if anything. We need to see it breach that. That's going to be important. We need to breach that level to liquidate these stops here, to take that liquidity. And then we look for a return back up to either fair value gap or a bearish order block on the 5-minute. So that's what we're looking for. All right. 1 minute just gave us a clear, it's in the process of giving us a bearish fair value gap. 5 minutes doing the same. It's got some stuff to get through, but you get through here first because look, the reason why there's no hurry to short, even though that's where bias will be if 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 we cross this alert line and it gives us at least an equal low or even just a lower low by a tick. Want to see that. That's important. Because look, when price comes down here, I promise you, this 21 EMA, this bullish fair value gap, it's at least going to bounce off of that. And you really kind of want to see what happens after it bounces off of that. You don't want to short and then see what and then see what happens. You want to see what kind of how does the market going to react with this thing? 'Cause it's going to bounce off of that. So unless you're going to take a short and then close it once you get down there and then see and then take another short, which you could do. I definitely wouldn't recommend just opening your short, putting your stop up here, and then just seeing what happens. Could work. Anything could work. But we know that there's support down here. We know we have the 21. We know there is a bullish fair value gap on the opening candle. That needs your respect. As of right now, we're digging into this bullish order block here. We're digging into it, but we haven't breached it. We haven't breached it. It doesn't mean that there isn't a sell program going on here, and it looks as though 0475 is the level for the bearish fair value gap. Let's see if this on the 1 minute, see that this bearish fair value gap here, let's see if it gets any respect. 650. No respect there, but that's why in 1 minute we can't sit here and trust in 1 minute. Gotta wait to see what happens on the 5. All right, well, what's the other possibility? If we're going to grind higher into this monthly bearish order block, if we're going to get and go and breach this thing, if you're going to breach the castle doors, then it's going to require fuel, which means they're going to be having to bait shorts, and it could just chop a bunch of people up today. Could just chop a bunch of people up today. You're not going to get me so easily, sons of bitches. Oh, I know you. I know you. Know what y'all do. You can't play me. I know better. I know better. That's why I'm locked and loaded. No trigger pulled. And now you can see why. If anything, I guess, what did I say? This is a place to long. If anything, if you believe we will grind higher into this sucker today for an 8th straight day of up onlyness, and that's all you. You can long that. But not for me. It's not for me. All right, so got to bounce. We're now delivering from this bullish order block, which is a pretty good sign that we're going to see a new high for the day. And there's room to the upside. I mean, if this thing gets disrespected, there's a weekly bearish order block, but it's way up here, 4630. I'm going to make a new high. Might have a continuation trade set up here at 06. Has it flipped? Are we there yet? Ah. So in the 1 minute, this was a break of structure, right? We have the higher highs, higher lows all the way through here, and then boom, we get a lower low. But if that ends up creating a higher high, this is bullish, right? Because that's just a shakeout. That's just a liquidity grab. So this would be bullish. If we make a lower high, then you know what that means. Bear or bulls have been sufficiently trapped. Man United up 1-0 on Lyon. Friendly today. Is there enough juice in this bullish order block to get a new high out of the day? I would think so. Certainly not happening with any enthusiasm. Bond's pretty flat today. Goldman missed, but Carvana jumps. We officially live in the upside down. I just wonder, what does it feel like if you're Goldman Sachs, you have an absolute edge in the market because you know what everyone's doing with everything. You manage all this money, you have control of the government or a lot of factions in the government, and you turn a quarterly loss or a profit that's shite. How do you go home with that? Like Hillary Clinton in 2016, everything rigged for her and she lost the election. That's gotta sting. I mean, that's gotta sting. You really had everything going for you. Everything was on your side. Okay, more wicks in this area. More wicks in this area. For if you're joining late, let's just show monthly bearish order block initiated right here. Look at a lot of selling right in this area that we're sort of getting into. These are monthly candles. Okay, so we've got a lot higher than this on some of these, but this is just a place that we've seen a lot of macro rejection in the past. We kind of expect the same here, even if we do continue higher, to maybe reject here, come down, and then continue higher. So that's the monthly. There's the weekly. You can see where, I mean, it's a multi-week bull run, a beautiful thing. Not a lot of rejection here. A few weeks we were down. Nothing terrible. Back to the 1 minute on the left side, 5 minute on the right. Again, so we're just talking about this 21 EMA fake out. Okay, come down. If this was on the 5 minute, I would have taken this. So we have the bullish fair value gap touching 21 EMA. Price comes down and touches both at the same time. That's a nice confirmation. You should expect price to go higher. And look, it has gone higher from there. 06 to now 08, 850. So 2.5 points right there just on that. So that's what I call a head start. If you know a certain area is like a likely little, you can at least get a bounce of some sort. Those are the areas you want to trade. You're going to get a head start there. It's going to, even if it goes against you, at least, it started off a couple points in your direction. So that's a head start to target. I don't take that trade on the 1 minute, but look at what we got going right here. Unable, equal high. Okay. Okay, guys. Equal high here. Now I can move the alert up because break of structure has changed. Now be this guy. Right? This is the low. that we would need to see taken out. But truthfully, we would really want ultimately, we want the alert there. I have a feeling this is all gonna happen later when I'm done streaming because that's what's been happening lately. Best trades have been happening after I'm done trading for the day. Patience is the hardest part of this thing. That is for sure. So equal highs, little rejection there. And now you're gonna go make your new high for the day. You got this. You can do it. Of course, unless that is a bearish order block. If this is a bearish order block, and let's go ahead and draw this because now we've got 3 rejections on the 1 minute here. Unable to breach that area right there. That's your 1 minute. 1 minute bearish order block right there. It is holding ground currently. I don't trade order blocks. I like to know where they are. I like to see, you can see here actually on the 5 minute as well, 3 touches and now getting the rejection. So but remember, we're all up in right now a monthly bearish order block. We are inside of one right now. We're currently penetrating a monthly bearish order block. So if price is going to go higher, there's going to be lots of this shit. We've already seen it, right? Drop, big wick. Drop, big wick. Now we could, if price goes one tick higher here, we'll say, all right, we'll forget the idea that there's a bearish order block here, but it's not been able to do that. 3 attempts, 3 different 1 minute candles, 3 different 5 minute candles, and not been able to get through there. Let's see if we can get a break of structure here, which would put the antennae up. That, hey, we're actually entering into a sell program here. Now this is back down. Remember bullish order block down here. Let me draw that too. This is on the 5 minute. That's the battle right now. Who's going to win? Okay. Structure's broken. Sell program's been initiated. Or no, equal lows. Guess my alert wasn't set at the exact right spot there. Equal lows there. Still bullish order block here. All right, now we're getting a pretty decent size fair value gap opportunity on the 5 minute. Again, stay patient here. When price gets down into here, it is going to come back up. So you don't have to feel like, I shouldn't say that. We don't know what price is going to do, right? But it's a very good chance if price does reject down here quickly, it will pop back up quickly. Okay, there's a lot of reason for price to go higher off of coming back into this bullish fair value gap on the opening 5 minute candle. That is not something you want to be bet against. You want to see how it reacts off of that. Ideally, that's what you'd like to see. But if we come down here and we breach this bullish order block, let's say touch the 21 and then come back up to this bearish fair value gap, 100% I'll take it. Yeah, you just have to take that. At that point, you just have to hope that, you've got a good enough entry. You're far enough away from this that the bounce off of it isn't going to take you out. So let's see what happens here. Setting up. So far the way you'd want it to. But again, buyers are there. Buyers are there. But remember what the sell programs will do. So the sell programs, they'll sell, of course, and then they'll step out of the way. They just pull the ask and then let the market come up, and then they come in and hit that over and over. So this right here, so this indicator that I use for these fair value gaps, it puts them out there in real time. So it doesn't wait until it's official to throw it out there. So sometimes I've made this mistake when I first started using the indicator. Sometimes you look at it and you go, "Oh, look, there's a bearish fair value gap there. We should take that." No, no, no. It's not official yet. Until this candle closes, this is not official. So this could move or it could get erased. You know what I mean? So I have to be mindful of that. The tough decisions come when both of these order blocks here. You can see why price is being choppy. I mean, that's just there's a fight going on at this level. There's a fight going on. The only reason why my money's on bears here is because monthly bearish order block, insane amounts of rejection from here. Even if we were bullish long term or ultimately or macro, whatever you want to say, it would be okay and understandable for us to reject here and then come back again and try this guy later. Um, it just seems like this is, lower is more likely, even if it's short lived. I could be wrong. Could be wrong. I can grind through this thing. So I want to see one of these get violated to give us a sense of where we're headed next. Couple minutes left in this candle on the 5 minute. And you can kind of see the difference, right? The first interaction on the 1 minute. This is why the 1 minute can be helpful. Just zooming in, right? The first time, well, let's see. The first time we really went into this thing, dug in pretty deep on the 5 minute there, dug in even deeper the second time we went into it. And now look at us violating equal lows. 0125 and 0125 equal lows. Does it have one more little bounce left on it? You can see it progressively just sort of digging in and taking those buyers out. Then they pull the offering, right? The computer pulls the offering, lets the market buy back up. All right, we have a break of structure with equal low. I'm ready to get in. I'm trying to find a spot that makes sense. 425. 425 would put our stop. Yeah, we'd be able to put our stop clear of the highs. We'd only lose out if we make a new high. 09 to 04. I think 04 is about as for a safe entry. Remember, we haven't even gone down and touched this 21 EMA yet. So this is a tough call. It is. This is a tough call. Would like to see that touch get out of the way before I get in. Um, Equal those again, and now one tick lower, and we can claim victory for the Bears. And there it is. All right. I mean, we can't claim victory, but won the battle. We'll see who wins the wool. Right now, the Bulls are definitely winning the wool. Most certainly. All right, let's see how this reacts. Now, we got the 21 EMA and the opening candle fair value gap. On the 5-minute. I'm going to now just focus on the 5. Okay, here's the opening candle. There's the opening candle fair value gap right there. Expecting that we will bounce higher off of that. This is really the play that we want to make right here, 475. If we can get a return, so I just think I don't know if we will. I don't know if we'll get the chance to sell at that high or not. Today might just be one of those days where the market sells off. So now bouncing off the 21, and we have to take this. You know, if it comes up to, I'm even going to front run that by a few ticks. I'm ready to sell at 04. Gives me a stop at 09. I don't think the just bouncing off the 21 here is going to be enough to take this, you know, up to a new high, right? I mean, if we're going to really get up to a new high, it's going to have to come off of, you know, maybe there's a big liquidation candle down here, and then, you know, rubber bands up higher. Right now it's struggling, and I wonder if it will have the strength to get up here where we want to sell it at 04. So we're 8 ticks away from where we'd like to enter short here. Is it possible that it just dies and comes down here to take out the opening range low? That's always possible, right? Always possible. When that happens, if that happens right now, I'm mentally preparing myself. If that happens, it wasn't my trade. That's okay. Most of the time, it won't. Most of the time, your patience will be rewarded with a premium entry that allows you to take profit at full target more often and risk less for your invalidation. So I think being patient here is prudent. Now, this candle is about to close. And let's see, what, 12 seconds away? If you get the march up into this guy right here, I mean, that is just absolutely perfect. I mean, look at that. Look at that. Perfect fair value gap right on top of the tip of the spear in this monthly bearish order block. I mean, if you were a sell program, how would you do it better? How would you do it better? And I know the hard part is like if you know, if this thing were to come up here, it would have to kind of get a little bit of a bullish looking formation, right? Like I need another green candle, and I think it's scary, right? The setup like this, the best trades to take are the ones where you tell yourself literally like, I have to take that. I can't not. I have to. Have to. It's just too good. It's too good not to. Could this be a liquidity sweep right here? Right, it's getting close. We're going to take it. And we're in. Now, why did I want to front run that? A couple reasons. Of course, I could be wrong. We could have, this could go against us. It's always the case. Would have liked to see this come down and actually touch this first. That would have been ideal. But that's not what we got here. All right, so now we just touched it. So even a little more patience would have been rewarded for me in this case. And now let's see how it reacts with this area right here. Now, if it completely just bullets through this fair value gap and we don't see a rejection, if it just sort of like guts through here real quick, very good chance I'm Audi 5000. But it'll only be because if that happens, most likely we get a bullish fair value gap here. And so the signal has flipped. So the only time I can get out before I get stopped out is if the signal gets flipped. Okay, so just knifing right through it, not the sign that you want to see. But part of the reason why I like this setup is because this right here, so we have this is on the 1 minute, but this right here is on the 5 minute, and that is a bearish order block right there, that green candle. So I have my fair value gap here, and I have a bearish order block behind that as protection. We were talking earlier today, place your trades, you want to have protection. Essentially, the money that you use to trade with is like your soldiers. You're sending them to battle. They need to be protected on the battlefield. So you want to have as much protection between your entry and your stop as possible. In this case, I have this 5 minute fair value gap after a break of structure, and I also have a bearish order block behind me. So if my soldiers die on the battlefield, it won't be because I left them out there for dead. It won't be because I left them out there to die. It'll be because we just lost the battle. They had too many soldiers. They took us out. It won't be because of my negligence. I left them flapping in the wind, or I left them out in an open field. So that's kind of how, you want to look at, like, well, where should I place my stop? Place your stop where it has protection. You want it to be protected. And in this case, also, if I'm right about direction, if this trade works out ultimately, and we get rejection down here, when I move my stop to break even, this right here, this candle should protect me on the way back up if we get that. So we'll see. It's tough to be short, on the 8th straight day of prices being higher. It's not really, it's not ideal. Ideally, we would look for a long setup here. But this monthly bearish order block, we're in the silver bullet time frame. We got a very clear short signal. There's too many things you just have to take. You just have to take that. And if we end up being wrong, then we end up being wrong. It is what it is. In the meantime, Tesla, you go, boy. Get him, Elon. Let's go. And Meta, both just relentlessly going higher. My two biggest positions in the old retirement portfolio. Gold finally getting some rejection. Bitcoin still hovering around 30,000. Doesn't seem to want to go much lower than that. Kind of the same thing with Ethereum in 1900. It's like the same. All right. So our hopes, wishes, and dreams for this trade right now. See, so this fair value gap is not established yet. It's just a potential because this candle hasn't closed yet. So that's one thing to keep in mind. This one is established, but we do have it working against us, and that is not what we wanted to see. Did not want to see the range of this candle get breached like that. And it looks like we're going to get played here. And that's what I get for saying, hey, price won't just bounce off the 21 by itself and go and make new highs. That's exactly what I get. Liquidity sweep. That's exactly what I get for saying that. Well, it's been a while. I'm due to take a full stop. It's been a long time since I've taken a full stop, but I've been saying I'm due for a while. We'll see. Again, bearish order block here. Protection, right? At least look at my soldiers. At least they're getting protected with something. It's not just coming up and just wiping us out. That's what happens when you knife catch, right? When you knife catch, you can just get taken out. And so at least there's a battle. At least I got a sweat out of it. You want to at least have a sweat, like you might have a chance. This maybe would work fire you. But for the most part, if you get an order block and then a fair value gap stacked on top of it, that's definitely the direction you want to be trading in. Or let's say you don't want to be trading against that. Like you wouldn't want to be long seeing that. Like you would want to wait. If you wanted to long this, you would want to wait until this was breached, right? Until this order block was breached. And now we're into the green finally. Now the reason I use ticks on here instead of dollars is psychological for me personally. I don't want to think about the money. All right. Now superstition can be set aside now. I don't want to think about the money because that can cause mistakes to be made. I need as much of the decision making out of my hands as possible. I've learned this about myself. This is just, I'm not one of those traders who can sit here and manage the trade. So now that bullish fair value gap that was here is now gone. That was covered. So this will disappear. Like it refreshes every like 30 seconds or something, or 15 seconds or whatever. So that's now gone. So that can be confusing sometimes. It looks like, oh, hey, you got a signal the other way. No, this actually didn't turn out to give me a signal the other way. Now, if I'm short and I get a long signal, that does give me permission to exit the trade. I don't reverse though. I won't go, oh, okay, well, I was short. Now I get a long signal. Now I go long. No, I just get out of the trade because I don't want to be going back and forth. I just get out. What was it last week? Thursday. So I've been doing these streams Wednesdays and Thursdays, and I'll start doing them every day in a couple months. I have a plan for rolling that out. It is helpful for me to do this and to talk it out, and that's the reason why I'm doing it. I'm not a guru. I'm not selling mentor packages or an indicator or something like that. This is really for me, for my trading journey, is to stay focused, to talk it out the whole time, the entire time we're in the trade, the entire time we're are trading, to talk it out and to stay focused the entire time. And so that's the reason why I'm doing the live stream. It helps me do that. It's a great piece of advice I got to do that, to stay focused. If I don't do this, I tend to get distracted with emails or news stories or something else. And then, now I'm distracted. And so when you're distracted, you're not going to trade as well. Just that simple, right? Now, the question here is, into the face of this, should this be a 5 handle target? Probably should. I mean, to get all the way down to here, although we just take out the opening range low, by a point, to get all the way down to here may be tough in this environment. And so my rule is that if price action is choppy, to only look for 5 handles instead of 10. And unfortunately, I believe that's kind of where we are right now. So I may just go 5 handles here. 750. Yeah, it's getting to be that time. I don't know if I have the time to sit here and wait for this to make its way all the way down here. So there it is. Which price gets hit first, 99 or 09? That'll determine whether this is, quote, a winner or a loser. And based on the way that I trade, it's a perfect setup for it to go lower. We got to break a structure. We've got bearish fair value gap. We got the bearish order block protecting our stop. There doesn't seem to be as much protection for the low side as there is for the high side. But the macro trend is definitely higher. So we're sort of pissing into that wind a little bit. And this may take forever. We could chop around in this range for who knows how long. The opening range high liquidity has also been taken. The low has not. So there's like how many things, stacking up, but also the opportunity for a bullish fair value gap here was erased. That's also something that would be what you'd want to see if you were short like I am right now, down 4 ticks. Either way, it's not going to be a big deal. The count will go up or down 1% ish if we have a winner or a loser. But either way, I think it's going to be a rough battle, whichever direction ends up at. I'm going to have to call it in about 7 minutes or so. We'll see if we get a conclusion between now and then. Could just be a bear trap, right? No, heading back up. All right, we're going to touch that bearish order block again here. Now you'll notice it's kind of the same thing happened with this bullish order block over here. Just kind of each time it went into it, got into it a little worse. So touch it the first time here, reject a little bit, got into it further, didn't reject as much. Now will it get into it even further? That's not what I'd want to see. What I want to see is I want to see it reject right now. So it doesn't get into it as far as it did the last time. That would be a better sign for being short right here. I hate the fact that I'm due for a full stop out. That's just the reality of probabilities. I haven't had one in so long. My instinct, my gut wants to pull this stop down. It does, but I'm not allowed to per my trading plan. And I am a good boy when it comes to my trading plan. You have to be. You have to be if you want to have any chance. I mean, there's two. If you want to trade in a hobby fashion like I do, because you love it and because you appreciate the challenge, the mental challenge, the you versus you challenge, the discipline that's required, that's something that you think is cool and you want to do something like this. You got to realize that there's two different people you have to be, two different jobs that you have to have. You have to have the CEO role and you have to have the secretary role. Okay. The CEO is the one who makes the decisions, right? That's the you who creates your trading plan, who makes the rules, who determines, what you're going to trade, does the back testing, that's the CEO you. Okay. And that person makes the decisions unemotionally when the market's closed, after hours, looking at charts, back testing, watching videos, researching. That's the CEO you. Oh boy. Wow. How about that? Like to see that go in your direction, huh? Okay. We're definitely into a sell program here. 16 ticks. Blasted through the target there. And there you go. And that's a wiener. Right on time. My goodness. Thank you to the market. Thank you very much. Thank you very, very much. And we would have hit. Oh, you gotta love the markets. You gotta love the markets. We would have hit full target. God bless. And what did I say earlier? This is just the market giving me a middle finger. What I said earlier was there's no way the market would just knife through this opening candle, bullish fair value gap. No way. And that's exactly what it did. We would have hit full target so fast there. But it is what it is, right? Price action had been choppy. That's part of my plan to make that determination. Like if price action is really choppy, which this has been, move the target to just a 1-to-1 instead of 2-to-1. We would have gotten 2-to-1. Here, let's show this up there in case you missed it. Rewind. So we got in here, front ran it a little bit, right? If I'm gonna critique myself here, my entry was a little bit premature. Have entered at 0475, or if you want to say one tick, 450 instead of 4. The reason why I was okay with the entry at 4 is because there was this, this breaker over here, it's right here. Like I felt like these candles were going to cause rejection to happen more quickly. And so I was still able to use my stop limit, so my maximum stop limit, to have clearance of 2 ticks on the high side by getting in at oh 04. And so that's the reason why I got in there. But in hindsight, I could have been a lot more patient, right? I could have actually waited for the throwback to the order block. The way my plan is constructed, what I'm looking for here is I'm looking for the break of structure, which we got here. So let me just walk through the trade, which oh 04, we got down to 90. So my original target was at 94, and just moments before the market nuked down straight through where my target was, I made the decision to move up because the price action was choppy. It was choppy. And one of the things we've been talking about from the very beginning of the day, if we're going to go higher, if we're going to get through all this, it's going to be kind of choppy. So, and that would be against me being short. The reason why this trade was good was because of the protection that was there. We had this bearish fair value gap. We had this monthly bearish order block. We had this 5-minute bearish order block. We had a lot of reasons to believe that we were in a good position on this trade. Oh, I forgot this.
Check, please. Check, please.
So that's the reason why we took that trade. We had protection for our stop. And the setup, okay, low right here, right? And then we've got higher low right here. Then we break that right here by making this lower low. So that's our break of structure. So this market's going higher, which means we should expect higher lows. When that breaks, what I look for is I look for a throwback. So I look for price to come back against that move, right? Because there's apes jumping in right here. Short, they're going to get stop run. So I look for a throwback to the fair value gap or the order block, whichever one's first. Sometimes you have one or the other. You don't normally have both. If you have both, you have to take it. Remember what I was saying? That price gets to here, I have to take it. And those are the trades you want to take. The trades you feel like you have to take because it's just so obvious. So everything just worked out perfectly there. The only thing I'm going to kick myself for the rest of the day today is, just we'll look back. I'm going to look back at the video. That's the reason I'm doing this, is so that I can watch these videos and look at my mindset. But just notice how manipulated your mentality is by the market. Pay attention to that. It's the reason why I try to make these decisions as mechanical as possible. Like it has to be if this, then that. And right before we hit target, what I was talking about was there's two. So I'll finish this thought, and then I'm going to go because it's 8 a.m. here. Time for me to get after my workday. Two mentalities you have to have: CEO mentality, one who makes the decisions, creates a trading plan, does the back testing, unemotional, looking at the market, when it's not open or when it's, after hours, no emotions. No, there's the CEO. And then there's the admin, the secretary, the person whose job is to just follow the rules that the CEO has put in place. A lot of people, when they're supposed to be the secretary, they think they're still the CEO. And so they make game time decisions. Oh, I'm going to do this, or I'm going to do that now. Screw my plan. I know better. I can see what's going on here. I'm going to do this now instead. You have to trust the CEO. You have to be a secretary. So when I'm taking these trades, when I'm doing this stuff, I'm just trying to be a secretary. And look at that. We did get a bounce off of that 15-minute bullish fair value gap there. I'm just a secretary. I'm just supposed to do what the CEO told me to do. And the CEO told me that if price action is choppy, then we should go to 5 handles. And I moved, but notice price action was choppy just long enough for me to move my target up to only 5 handles instead of 10. Just moments before it absolutely blitzkrieged straight to where my original target was set. So we sat there with our target. I mean, it hit target almost immediately after. So this candle hadn't happened yet. So let's see. From the time we got in, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 minutes. We sat there with our target at 94. And then right when I moved it up, boom. That's when we got the huge move lower. Crazy, right? It's crazy how the market does that to you. Oh, well. Winner's a winner. $500 chicken dinner. It is what it is. Time for me to get to work. Y'all have a good day. I will be back tomorrow. We'll be back tomorrow doing this thing live. Did we miss an open trade? I got to really evaluate that today. Would have been pretty low risk. That's the only reason that I look at it and I go, gosh, you know, I should have just kept the open because it would have been a pretty low risk. I mean, gosh, I could have had an 8-tick stop on it. We had made 10 handles within 10 minutes on that trade, and then we would have hit our second trade for a full as well if I hadn't moved the target. So there's always things to improve on. Go back and look at it. That's why I'm doing these videos. Hopefully it's helpful for you. Got out of here. Win is a win. I'll take it. I'm off to work. You guys have a good day. Peace. See you tomorrow.